Hi, this is Doug English with Act Advisors with your April 2022 update. In April, the bear had great control of the stock market, with the S&P dropping about 10% for the month, the NASDAQ dropping 15% for the month, and the Russell 2000 small cap index losing about 13%. That brings us to 13% or so off for the stock market as measured by the S&P for this year. Now, that is a dramatic and difficult and painful decline. And it's exactly the average decline that we've seen since 1980. So this is very normal, very unpleasant. I know your statements, what's happened over the last 20 years that we've worked together is your account balances have grown and gotten so much larger that a pullback like this, that is an average pullback that you've seen many times in your accounts, now is a very large dollar figure of a pullback, and it becomes much more difficult to deal with. Now, the bond market also had a drop, but much more bond-like of 2.9% for the month. Now, those of you that have IRA accounts with us, remember that the bond rotation is operating within your IRA accounts. So those accounts have basically been in short-term bonds since the end of February. They've missed all of this month's pullback for the funds that are in that bond rotation. We do expect that to change. Now, it might be that inflation readings for materials may be peaking. And if that's the case, we might just see some positive returns in bonds in May, and then we could rotate back into some of those bond instruments depending on what May has in store for us. So this average pullback in the last 21 examples of years that have had a pullback in them, 12 of those years, even after being down this amount or more, 12 of those years still ended year-end with an average ending value 17% up for the year. So there is reason for optimism. We think this market is trying to digest how the Fed's policy, its planned rate hike pace is going to play out, to figure out if they're going to go too far and push us into a recession. How deep is that recession going to be? How long is it going to be? We're not going to know that for sure. So this market is likely to continue to really gyrate around as it tries to figure that out. But eventually, our base case scenario remains the market ends up in an upward direction. Now, our confidence in that base case has decreased because of the sheer amount of unknown in this economy and in these markets. So what we would say to you is the most important thing is that you don't sell stocks at these levels. As you remember, we stopped any of you that have systematic withdrawals from your accounts. We stopped them coming from stocks and moved them all to bonds earlier in the year because we don't want you selling stocks when things are 10, 12, 13% off. We do like it when you're buying stocks at these levels. So we changed all your new money to be going into stocks and not buying bonds or the other areas that aren't down as much. If you have cash on the sidelines, I know many of you do, and you might want to look at putting a portion of it in at these levels. So as always, we thank you very much for your business at Act Advisors. We know how difficult times like these are, and that's why we're making these video messages to try to let you know we're on top of it. We're here and ready to talk and to help dial things in for your custom situation. So call us if we can help. Thanks very much for your business.